This has been a very good year for stocks in general. S&P up 9% year to date, but it hasn't been a good year for the healthcare sector. The biopharma companies are struggling to adapt to the Trump administration, especially the Department of Health and Human Services under RFK Jr. They don't like the presidential browbeating on drug prices with the prospect of tariffs on pharmaceuticals either. Sell. Meanwhile, the managed care sector is in shambles as people are simply getting much more health care than they're used to, and their insurance companies haven't been charging them enough. But tonight I want to talk to you about one of the rare healthcare stocks that's proven to be a port in the storm, and it is a shocker, people. It is CVS Health. Yeah, the drugstore chain with a pharmacy benefit manager, Caremark, and a managed care business, Aetna. This has been the best performer, get this, in the healthcare sector in the S&P. It's up more than 58% for the year. How the heck did CVS pull that off? All right, now some of this because CVS has become the last man standing in the retail pharmacy space as its last major rival, Walgreens, is set to be taken private and plans to close hundreds of stores in the process, while Rite Aid suffering through its second bankruptcy by shrinking beyond all recognition. But some of it's simply because the stock of CVS already got pulverized last year. It was down 43%. You know, it was the 10th worst performer in the S&P. The problem came from Aetna, their managed care business, which was crushed by all the things that have wrecked the healthcare industry stocks this year. Specifically, the prices were too low in a world of higher than expected medical costs, especially with their Medicare Advantage plans. So in other words, what they did really bad last year is what some other companies are doing this year. Now, I bring this up because I have to, because this year, CVS is finally seeing a turnaround from the managed care side of the business. Now, it's not a great performance, but it's definitely a better one.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.